Hey traders, this is Sia. Well, we have come to the end of May, and basically in this month's last Forex trading video, basically I just want to showcase to you my performance, basically starting from mid of May and just give you a sense of a heads up that as a trader, um, it's a slow and grueling grind when you're actually trading the market consistently. And I'm sure you know by now that I am a swing trader, meaning that I look at the higher time frame starting from your daily, your 4 hour, and then your hourly charts. No, basically a rundown in terms of trades that I have actually took. So basically, from the middle of May, I have taken a total of 14 trades. This is made out of bats, ciphers, and godless. Yeah, so basically three types of setup, as well as a structure-based trade which I took on the 19th of October. So basically giving you a quick rundown in terms of the performance of that, you will see that this is from the beginning, okay, from the from from the mid of May. Okay, the first trade I actually took mid of May. So on average, you're looking at a 4 to 5 trades losing streak. Now, it might come as a surprise that any typical trader at this point in time would literally give up, or yeah, pretty much give up and probably seek a new trading strategy. But for me personally, I have found that bats, godlies, and ciphers have been consistently have a positive expectancy, if I may put it in a better way, have a positive expectancy in the long term. So now, looking at this losing streak that I've had, okay, where you find that I have 1, 2, 3, 4 losers, then one winner, 1, 2, 3 losers, then one winner, 1, 2, 3, 4 losers, and then one winner. So you might find that when you, as a trader, psychologically wise, it does hurt because your emotions do kick in. But personally, as a professional trader, I have, trusted my trading strategy and my trading plan to an extent that emotions are not something that I stress about, but they do come, I won't lie. So basically, looking at that now, if I were just to take a simple Excel spreadsheet and do an equity curve, showcasing to you basically from that first trade, that 65 pip loser, you're looking at equity curve like this. First off, as the month, middle of the month, hit losing trade, second trade loser, third trade loser, fourth trade loser, fifth trade 255 pips, taking me out of the pits, to give me 56 pips of profit. Then the next trade came, sixth trade I took me out for 49 pips, was left with 7 pips on the table. The next trade was a winner, the seventh trade was a winner, revving me up to 87 pips. So you can see it's a grind. You first get, I refer this to as trading terminology, you first get your initial structure low, you get an outside return which is higher than your previous structure, so giving you new equity highs, outside return, new structure highs, meaning that we actually hit positive territory, came back down, hit a drawdown, slightly above break even, then got slammed right off from typically from trade number 8 all the way from trade 8. Trade 9 was a winner. Trade 10 loser, 11 was a loser, 12 was a loser, 13 was a loser. So initially at this point in time, you know, mental wise, traders essence give up at this point in time when it comes to trading. And then the last trade, that on the last day, because when I trade, I generally trade in the morning, look at my charts and do my analysis in the morning, get my orders out and manage the trades during the day, during London session. So basically this is how it was, and that trade won gave me some nice profits, you know, to initially wipe out all these losses, all these prior losses of last week. So initially this week I took 2 patterns. So if I were to just bring out my account, just an example, I just took out a demo account just to show you here quickly. Now here on the account you find that this is the Swiss yen, and this was the pattern, this was the bets, okay, which I actually got stopped out here at the structure highs. So I got stopped out for about 70. I actually got stopped out for 76 pips on this one. However, the Aussie dollar on the other hand was one that was a winner. The Aussie New Zealand trade, sorry. Aussie New Zealand trade. Here we have a classic bat pattern. So I got filled here, took target 1 profits there, target 2 profit there. Now remember, this was not a easy plain sailing trade because you had price action almost testing my first target. Price action uh, created an outside return or retrace, then boom, higher. And remember, we're looking at 4-hour chart, so this in essence is for a 12, 16, 18, 20, almost about a day's worth of data I had to actually wait, you know, in order for me for the market to actually get there. So basically what I want to talk about as we end of this month is basically holding your ground, you know, and sticking to your plan. Because in essence, each and every strategy, or personally, each and every strategy that I trade personally, I have took the time to actually test it out. The bad pattern, the cipher, your godly, took the time to test it out and to actually do back test, run data, run numbers on it, see how profitable the system is. Next, forward testing that same strategy, seeing how the expectancy comes out for that, and you know, trading it live to actually make real money in the markets. So just to end it, just for an end notes, from mid of May, just to showcase to you that as a trader you don't really need to win that much. So basically looking at a win to loss ratio, uh, of the total number of 14 trades that I took, 3 were winners, 11 were losers. Now that might shock you. 3 were winners, 11 losers. Now when you're looking at the win-loss ratio, you're looking at a 21% win ratio. But in essence, I have actually come out of profit and have made 156 pips over and above. I've actually broken the threshold. of just break even to actually be in profit at the end of the month. So you don't really have to win that much in order to be a consistently profitable trader, as long as you stick it through and trade your plan to its consistency, day in, day out, without fail, without question, because your initial backtesting phase, or which I like to call it your strategy lab phase, that is where your strategy development has to take place. Errors need to be taken care of, fine tuning, all that grueling, dirty, grinding work. So when I'm presenting here and showcasing you all this, this is the other side of it, where I'm actually trading it live, managing my trades. So yeah, so that's how I pretty much want to end this month of May, and hope this video has been informative and has showcased to you that you don't really need to win that often in order to be a consistently profitable trader over a long period of time. Yeah, so pretty much that's that, and hopefully June treats me well and treats you well as a trader, and we out there making that money, making that bank, and yeah, enjoying our gains. Because in the long run, trading is a grind, and it's all about just sticking through with your trading plan. So without further ado, trade your plan, plan your trade. See you next week for another session, where pretty much I'll be breaking down what I'm looking for in the markets the next week to come. So yeah, take care. God bless.